We all could use a little extra cash every month, and monthly dividend stocks are one investment that can provide this. Many companies pay dividend, and most of them make quarterly payments. However, some make monthly payouts, and this makes them ideal for those seeking to generate passive income on a monthly basis. Money, landing into your account every single month without you having to clock in, work overtime, or take another side job is just another level of flex. These monthly dividend stocks pay you consistent income for just being an investor. So today I am going to share with you 3 monthly dividend stocks that currently yield over 4%, and they have strong foundations to support their ability to continue to produce reliable passive income. The first one is Realty. If you've been around the dividend investing world for a while, you've probably heard of this one. It is popularly nicknamed the monthly dividend company. It is a real estate investment trust, what we call REIT, and they own over 15,000 commercial properties. 15,000, from grocery stores, and pharmacies to gyms and cinemas. They have tenants like Walmart, Walgreens, FedEx, and these companies pay rent every month. And Realty Income shares that rent with their investors. Their dividend yield is around 5 to 6%, and they have, paid dividends every month for over 25 years. And they keep increasing it almost every year. So if you had invested, say, £1,000 5 years ago, you would have earned hundreds in dividends. And you would have also enjoyed steady capital growth. And all that income keeps coming in monthly. Realty stocks currently sells for $60 per stock. That's per unit. And this is the point I tell you, that you do not need $60 to buy their stock, to buy this particular stock. You can buy whatever amount you have, even if it is $5, even if it is less. Thanks to technology, fractional investing is now possible. That means you can buy 0.02 of a stock. And this has made it has made investing accessible to so many people. If you're thinking, where can I buy this stock? Check any brokerage platform. If you're in the UK, check out Trading 212. If you're in Canada, check out World Simple. If you're in Nigeria, check out Bamboo. If you're in the US, check out Vest. I do not have affiliations with any of these platforms. Aside World Simple in Canada, I am currently investing using, the other 3 platforms, which is Bamboo, Trading 212, and Vest. So number 2 is Stag Industrial. It has a ticker symbol STAG. This is another solid monthly dividend payer. Stag is a real estate investment trust too, REIT. But instead of owning malls or offices, it focuses on industrial properties. So think warehouses, light manufacturing buildings. These are the kind of places companies use to store goods, handle logistics, or even produce, their products. What makes Stag attractive is how it earns. It leases these properties to tenants on long-term contracts, which means steady and predictable income. The kind of cash flow you want backing your dividends. So right now, Stag pays a monthly dividend with a 4.3% yield. Let me spend some time to explain what this dividend yield means. Imagine you invest £1,000 in Stag Industrial. At a 4.3% dividend yield, this means that you'll get around £43 a year in dividends. That's your share of the company's profits paid back to you for just holding the stock. But Stag pays monthly, not once a year. So instead of waiting 12 months to receive that £43, you would get a small payment every month. That would be around £3.5 every month in your account. So basically, that's what, dividend yield means. What is impressive about Stag also is that it only pays out about 70% of its cash flow, keeping the rest to reinvest in more properties. In fact, according to Nasdaq.com, it plans to buy between $350 million and $650 million worth of new properties this year. And since its IPO in 2011, Stag has increased its dividend every single year. And that's over a decade of consistent growth. Today, he owns more than 500 properties across the US, with most of them on long-term leases. So if you're looking for a steady, reliable, monthly dividend stock, Stag Industrial deserves a spot on your watch list. It currently sells for $35.90. Again, you can buy in fractions. Don't overthink it. Okay, so before going to number 3, let me take a moment to talk about our financial learning platform and community for African immigrants and anyone actually who is willing and ready to change their money game. We have members from over 7 countries in our community, and we do not leave anyone behind. We do not leave anyone behind. Everyone gets a one-on-one guidance and hand-holding on how to start making their money work for them. We are all making sense of our money, and we focus on 3 things. We are investing our money, we are learning from experts, and we are leveraging that community network. We are holding ourselves accountable. We save every month, we invest every month. We use the information and resources available to us to take opportunities to grow our money. This is important to us. If this sounds interesting to you, I'll put the link in the description box. Please feel free to check us out. Okay, now let's get to number 3. This monthly dividend stock is Main Street Capital with a ticker symbol MAIN. This is a favorite in the dividend space. Main Street isn't your typical real estate company. It's actually a business development company, or what you call BDC. And this basically means instead of buying properties, Main Street invests directly in small and mid-sized businesses, usually companies earning between $10 million and $150 million a year. They provide these businesses with loans or even sometimes equity investments, and in return, they earn interest and dividend. That's how they make money. Main Street Capital takes a portion of that steady income that they get, and they pay it out every single month as dividend to their investors. So right now, their monthly dividend yield is around 4.9%. But if you include the extra bonus payments they also make, which they call supplemental dividend, the total jumps to about 6.9% dividend yield. That means you're not just getting consistent monthly cash flow, but you're also rewarded, when the company performs really well. The other thing is, Main Street isn't just maintaining its payouts, it is also growing them. The company increased its monthly dividend by 4.1% over the past year, and it expands its portfolio of investment also consistently. And then the numbers will keep coming, and the numbers will keep climbing. So if you want a stock that pays every month without the, wild ups and downs, and you basically need it, to grow your passive income, Main Street Capital is one that you should keep on your watch list. I have particularly chosen dividend stocks that are not only paying dividends, but also growing in terms of share value. There are a host of others who pay higher dividend yield, but the stock value is declining, which means the amount you invested is declining. Secondly, you need to be clear about what your investment goal is. Is it long-term capital growth or dividend income? And I am mentioning this because companies that regularly pay dividends generally do not have as high capital appreciation as companies that reinvest their earnings. So it is important to define your investment priorities. If you want both dividend income and long-term growth, your investment portfolio should be structured to reflect both objectives. Some people are just for long-term growth. They don't want dividend for now, and some people they want that dividend every month. So you have to balance this depending on what your priorities are. And if you are here for the first time on my channel and you're wondering, how can I not put my money in the bank and yield interest instead of all this buying stocks and all that, then you should see my next video where I talked about why you should not keep your money in the bank. And I will see you there.